History is repeating itself yet one more time. Most altcoins are down in the last month, but Pudgy Penguins is up. Now why is that? Who's buying here? Who's selling here? Let's have a look at the data most people are not considering to figure out whether or not it still makes sense to buy the Pengu token. Now the price appreciation hasn't been steady. We went sideways for a while. Just in the last week, Pengu is performing well. Bitcoin, on the other hand, is barely moving. Pudgy Penguins is a meme coin on the Solana blockchain. And have a look at this overview. Only Pengu was able to make some gains consistently. For most other meme coins on Solana, we tend to rather go down. Now, why is that? We will not find the answer on the website. The website is simply just marketing. It tries to entice the average retail investor to get into the token, but it doesn't give us any edge, right? We want to get a market edge. We want to have the data most people don't have in order to outperform. And so let's start looking at exactly that data. What we see over here are the trending tokens on the Solana chain ordered by their liquidity pool size. So how much capital is in each altcoin? And when we do exactly that, Pudgy Penguins is only at place 34. It's got a bit over $200,000 worth of liquidity on chain. How is that possible when at the same time the market cap is close to $1 billion? Here's the price performance over time on a logarithmic scale relative to Solana. So how much did Pengu outperform or underperform in comparison to its liquidity pool pair? Now, why are we looking at this relative performance to Solana in the first place? Why don't we just look at the US dollar chart? There are two reasons. The first reason is we've got opportunity costs, right? Whenever we buy a small altcoin, we are taking on more risk compared to just Bitcoin, Ethereum, and Solana. So by taking on more risk, we should expect more return. We have to compare the returns. That's reason number one. Now, reason number two is that the price discovery of a token like Pengu is directly dependent on the price of Solana. Because the way decentralized finance works, the way those decentralized exchanges operate is they determine the price of an altcoin via the ratio of the two assets in the liquidity pool. So how many Pengu tokens are in the liquidity pool versus how many Solana are in the liquidity pool. So you can see this over here. How many pooled Pengus do we have in the liquidity pool versus pooled Solana tokens? And this ratio over here, this determines the price. So the price is measured via that ratio. So when the Solana US dollar price goes up by 10%, then automatically the US dollar price of Pengu also goes up by 10%. We don't need to see a single trade of Pengu for that appreciation to happen, because again, it's the ratio of Solana to Pengu that determines the price. That's why we look at this relative valuation chart. The relative valuation chart actually shows us how is Pengu traded, and we completely remove the noise from the macro environment. We completely remove the ups and downs of the Solana token itself. And so we see a bit of appreciation at the beginning, then a massive crash of more than 80% in the first quarter of this year. And since the middle of April, we start to appreciate again. Today, there are less buyers than sellers, yet the price is up. That's because the average buyer is moving more money today than the average seller. On chain, we've got more than 500,000 holders, but not all of those holders are created equal, right? Some of those wallets might just own a few cents worth of the token, while other wallets might hold hundreds of thousands of dollars worth of the token. So you have to look into more detail. Now, this is not the first video on Pudgy Penguins on this channel. I publish videos on the asset regularly, and it appears as if the attention on the token is somewhat constant. So most videos just perform according to average. The average video is here in gray, and the blue line is that particular Pengu video. So again, the Pudgy Penguin videos don't get a lot, but also don't get little attention. Just average. What's not so average though is the development on chain. What we've got on the left is the number of new wallets versus returning wallets that interact with Pengu. And on the right side, we've got the number of token transactions. It appears as if over time, there are less and less first-time traders trading the token on Solana. However, the number of token transactions did not necessarily decline in the same fashion. transaction. The trading volume clearly went down since launch, so it seems like at the beginning trading mainly happened on chain and then moved over time to the centralized exchanges. That then also explains why there's so little liquidity on the Solana chain and why it's only at place 34, because now all the price discovery happens on the centralized exchanges, not anymore on the Solana chain itself. What we're seeing over here is the number of holders over time. So as we've already said, there's more than 500,000 holders, but that used to be a bit higher at the beginning of the year. Now it seems like the number of holders is somewhat correlated with the price. The beginning of the year was also where the price of Pengu relative to Solana topped out, and then as the number of holders went down, the price fell as well. There is a clear reversal since the beginning of June though. And interestingly enough, that's over here on this chart. So we've seen already a price increase without seeing the number of holders going up. This doubling in the price over here cannot be explained by new investors entering on the Solana chain. There's something else going on. Pudgy Penguins is not your average meme coin on Solana. The typical meme coin is launched via the Pump.fun ecosystem. So that's a fixed supply, and that supply just gets traded across. Now, Pudgy Penguins is a meme coin that was launched from the very beginning on many centralized exchanges, and that also has token inflation. This is very uncommon for a meme coin. Have a look at this. There is some vesting that happened at the very beginning, and now we get linear unlocks. On a chart that looks like this here, more and more Pengu tokens will hit the market and potentially depress the price at one point. But again, how come we saw this price rally over here when there was no noticeable event on chain at the time? The market makers and the centralized exchanges have an incentive to increase volatility in Pudgy Penguins, because volatility also creates attention. Attention means potential buy pressure, and buy pressure is exit liquidity when you've got an inflating token. Now here's how this volatility is created. It's with bets on the price. It's with perpetual future contracts. Now, most of the time, the perps hit a positive funding rate. So the majority of people were betting on rising prices. Not so anymore recently. A lot of people don't trust the recent Pengu rally. Many people are betting on falling prices. The shorts have to pay the longs to bet on falling prices. This is not common. There is massive correlation between the open interest on Pudgy Penguins, so how many bets there are on the price, and the spot price itself. As there are more bets on the price, the spot price tends to go up, and recently many people are betting on Pengu. Just have a look at the trading volume over time on the perpetual futures. It's at very similar levels compared to the launch in December of last year. The trading volume on the Solana chain has completely died down, and instead all the action now happens on the bets on the price. Now, why does this shift matter? It matters because it tells us something about the nature of the people that currently get into Pengu. In the early days, it was a lot of retail, people just buying into the token. Now it's the market makers that use leverage. If you're using perpetual futures, you don't intend to hold the token over the very long term because financing costs are very high. If you're a long-term investor, it's okay to have this one-time expense of a bit of slippage with the transaction because you don't get in and out all the time. Also, you don't have financing costs. But if you're a short-term speculator, if you want to speculate on the price with leverage, then the costs of getting in and out do matter, but then the costs of financing don't matter that much. Thus, when we see the shift from the spot market to the perpetual futures market, that means that the time horizon of the average investor went down a lot. It shrunk a lot. Most price rallies that are fueled by the perpetual futures tend to deflate at some point. They tend to turn around. And so what's going on with Pudgy Penguins? Why is it the only meme coin that's currently going up? The answer is speculative money that's betting on falling prices is getting short squeezed. There are so many people that expect Pengu to go down that the market makers simply buy up more of the supply and push up the spot price. That's why we are going up. Once all of those shorts got liquidated and once the funding rate normalizes again to regular levels, that's probably when Pengu will come down as well. And so that's the never-ending cycle, right? The price always moves in the direction of maximum pain. If too many people bet on falling prices, the price will go up. When too many people bet on rising prices, the price crashes. Really, in this current situation, I think it's better to work with the general market structure instead of trying to find the needle in the haystack. Yes, there are a few altcoins that made profit in the last year. This is the smaller altcoins, the performance in the last year. There are a few green bubbles over here, but chances are, especially when you've got a diversified portfolio, that you are down. Because crypto is highly correlated, so assets do tend to move in the same direction at the same time. But there is long-term underperformance of the altcoins. What we've got over here in green is Ethereum, and in white we've got the altcoin. Both lines go up and down at the same time, but the white line tends to do worse long term. And there's a good reason for this massive underperformance of most tokens. And that's over here. It's shown on Tokenomics.ai. That's a website that tracks various altcoins. And just have a look at this. WorldCoin and Trump sees a lot of unlocks tomorrow. 5 million worth of unlocks. Solana has 10 million, but Solana is overall much larger in market cap anyways, so it doesn't matter too much. But WorldCoin and Trump doesn't have as much usage. And so, surprise, surprise, WorldCoin relative to Ethereum long-term tends to go down. And Trump relative to Solana doesn't look that different. When the early investors and the insiders and the team is getting more and more tokens over time, and the project itself isn't growing that much anymore, we see constant underperformance. But it's really about the relative valuation, right? It's relative to Ethereum or relative to Solana. It's not just in US dollars, because sometimes when there's a rally, the altcoins go up as well. It's just the ratio of the small altcoin relative to the larger market-leading cryptocurrency that goes down over time. And so there's a way to make money with this. We bet on falling prices of all of those crap coins, while at the same time we bet on rising prices of Bitcoin, Ethereum, and Solana. So we're winning on one end, we're losing on another end. We're just playing the delta, and we can make money by basically turning this chart around. Everything that's red here can turn into green. Everything that's green can turn into red. And then all of a sudden, we've got the odds in our favor. We're not trying anymore to pick the needle in the haystack. We're just betting on the haystack continuing to do what it's always doing. And so have a look at how our community is making money with this. If you've got proper stop losses in place, if your risk management is on point, individual trades can make massive returns. And so that's why I tell everybody that considers following this strategy to first watch the very first tutorial video here. Risk management with relative valuation bets. It's 28 minutes. Once you've watched that, potentially also with this video over here, you should be good to go. There are tutorial videos on all kinds of topics, but again, even though it's not a sexy topic, risk management does matter. Because even though the odds are in our favor with this strategy, you don't want to lose your shirt just because you've got one losing trade. Just because 1 out of 10 trades fails doesn't mean that you can use unlimited leverage without stop loss, because then this single trade that goes wrong will crush the entire portfolio. Risk management is super, super important. So feel free to learn more. It's currently $125 US per month. You will lock in that rate. So when I increase the price in the future, you will not be affected by that. Only new signups will be affected by higher prices. A link to premium will pop up over here. Just click on that. It will lead you directly to the website. If it's your very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.